Hello, Nate here from NMKL Trading Academy, head trainer and trader. And in today's course, we are going to talk about trading for beginners. Now, maybe you're just taking a look at trading um, and a little bit interested in it and you want to find out more. Maybe you want to do it as a side hustle to your day job. Maybe you're considering actually having a plan B and trading for the long term to develop a wealth model later on in life. Maybe you're wanting to do this and make it your full-time job someday, or a business. Okay, so there's a lot of things that could be going through your mind if you're looking at this for the first time. Now, trading, there's a lot that goes on inside of trading. And in this particular lesson, we're going to cover everything we possibly can for you to make a decision whether trading is for you or not. I'm going to be honest with you. This is the most comprehensive course for trading beginners that you're going to find out there. Okay. Now, along with this, you should have an ebook, and the ebook basically goes along word for word what I'm going to talk about in today's presentation. Now, at the same time, in the ebook, there are sections where you can take notes. Okay, so keep in mind, jot down any things that come across your mind, any questions you might have, or any ideas that come to your mind. And you can pose them as questions later once you become a part of the NMKL Trading um, Academy. Okay, so let's go ahead and jump into today's presentation. I have to let you know, guys, know up front that this video, this ebook, this presentation are for educational purposes only. This is our disclosure statement. Keep in mind that trading is risky and you could lose some, if not all, of your investment. Okay? All we're doing is sharing things that have worked for us in the past, and what we tell you is not indicative of future results for yourself. So if you have any questions about financial investments or any financial instruments, or if you're unsure about something, we recommend that you seek out a licensed financial advisor for guidance, somebody that has a license. Okay. Now, there are two agencies here in the United States that we use that actually regulate trading, the Securities Exchange Commission and the Commodity Futures Trading Commission, or CFTC. Now, in other countries, if you're watching this video, they have their own regulatory compliance regulators as well, or agencies. And I recommend that if you're going to work with anybody out there, any broker, any group of people, make sure that they are legit. Now, I'm going to take a second and cover this. Right now, in today's trading environment, there are a lot of scams out there. Usually scams hide from regulation, and they usually ask you for money to invest money with them so they can make, um, they can make a profit for you. Those are scams, okay? I'm just going to tell you that up front. Unless there is heavily regulated documentation that you're going to have to sign before you buy that financial instrument. For example, let me give you one. I was contacted by a group. They said, "Hey, invest $10,000 over here in crypto, and you'll receive 1 to 5% per day of your investment size. All you need to do is transfer your money to this account that I'm going to give you." You know what? Sounds good, but I didn't do it. You know why? There was no regulation there. That was a scam. Okay. Those are all over the place. Now, that's not trading, folks. Also, what I want you to be wary of is do your due diligence. What we're going to do here at NMKL Trading Academy is teach you the skill of trading, okay? And that's what trading for beginners is it's going to help you start developing the skill of trading itself. Okay, so make sure that whoever you're getting into business with or whoever you're associating with, they follow the regulatory compliance laws of that country. All right. All right. Without further ado, let's go ahead and let's see what trading is all about. All right. Now, trading itself um, basically refers to the buying and selling of instruments. Okay. Sorry about that. Uh, Trading is an intentional act of buying and selling financial assets. And that could be stocks, it could be bonds, currencies, commodities, futures. I'll even throw crypto in there in various markets. Okay. Traders, what we do is we aim to profit from short term price fluctuations. We try to also, in its simplest form, it's a modern evolution of the marketplace. Instead of trading grain and cattle, we like trading capital for positions in global assets. Let me kind of break this down a little bit more. Traders aim to profit from short term price fluctuations, like it says here in the screen behind me, okay? But also, we use market analysis, we use technical indicators and economic trends. Um, Trading occurs in various platforms, including stock exchanges and electronic trading platforms. Now, what we're going to be doing is working on a computer at home in the comfort of our own home when we're trading. You see a lot of that out there on social media where people are just sitting there chilling, doing their thing, listening to their music, and they're trading. It can be done, and that's what we will open the door for you to understand in this video today and many more courses to come here at NMKL Trading Academy. Trading can be done by individual investors, institutional investors, or through automated systems. Successful trading, I'm going to be careful to say this, but it does require understanding market dynamics. You also have to understand risk management, and you need to stay informed about global economic factors influencing asset prices. One of those today, right now, you guys mainly know what is happening in Iran, the conflict between the United States, Israel, and Iran. Well, you see that that is a geopolitical issue, and those are economic factors that are influencing the oil prices. Okay, so oil right now is over $100 a barrel. Well, it was the other day. It's coming down a little bit, but when anything like that happens, you need to stay informed and be in touch with what's going on around the world. Okay, so this is what trading is. Again, buying and selling of financial instruments. And basically, we're looking at short-term price fluctuations trying to make money. I hope you understand that. Buy low, sell high. You'll hear me say that again. Okay, what trading is not? Trading is not a get-rich quick scheme. You're going to have to understand it becomes like this guy here, Sagun Emanuel said, it's a way of life. It is not a get rich quick scheme. It is a way of life. In fact, some of the things that you're going to have to learn to overcome to be successful in trading is emotions. And we'll talk about that a little bit deeper. Okay. Now, one thing I want to kind of share with you here is how financial markets work. Now, over here on the right, if you look at the tradition, in the past, trading happened in pits, okay, where men in suits shouted at each other. Today, the market is a global network of high speed servers. Basically, you can trade from home. When you click the buy, your request is processed in milliseconds, okay? That's what this lady is doing on her laptop in the picture on the left. All right, here behind me. So I want you to kind of understand that there has been an evolution in trading, and now it is accessible for just about anybody to participate in the markets. Now, to be a trader, you need to know what you are trading. Okay. So let's talk about the major asset classes real quick. Um, each market has its own personality. So once you start developing the skill, okay, I can't just teach you a magical formula and you go in there and trade any instrument. It's not going to happen. You have to develop a skill. You got to get to know the markets that you're trading. It's like um, an old thing that I used to do when I was a kid growing up. We go fishing. Well, we needed to know where and what we were fishing for to be successful. It's the same thing with markets. It's like going fishing, okay, in a river. You need to know the characteristics of that river. You need to know what type of fish are in there. Same with this, what the actual market is, what asset you're trading, and what its characteristics are. So let's take a look at this um, thing here over my shoulder, this table. Okay, we look at the market, stock market. Well, there's a lot of different stocks out there, shares of companies, big companies, Apple, Tesla. Okay, what are some of the characteristics of this? It is driven by company earnings and news. Okay, so we have to look at the announcements coming out and see whether that was a positive or a negative announcement that came out on their earnings. Very key. Okay, let's talk about Forex companies real quick, or I'm sorry, Forex or currency pairs. The euro US dollar, for example. It's the largest in the world. It's the most liquid. It's open 24 hours, 5 days a week. Now, what's neat about that is know what's going on with each of those currency pairs, know what their characteristics are. All right. Let's talk about crypto. That's another asset class. Digital assets. Bitcoin, Ethereum are the two that are mostly traded. Now, what do you need to know about these? These are extremely high volatility and you can trade these 24 hours a day, 7 days a week. Okay, they're unregulated for the most part. When you see high volatility, you got to be careful because there is risk with that. And we'll talk about that more as you get into advanced and professional courses down the road. Okay, then there's commodities. A lot of this is what I like to trade, or what we call futures: gold, corn, oil, indices. And then the futures of different derivatives out there. Okay. Now, this is going to be driven by global supply and demand and a lot of times politics. Okay. So, this is just kind of what you need to know to be a trader. And we'll dig more into it as we get deeper into the courses. Okay. Um, Now, one of the things that you're going to need to be familiar with is a broker. Okay, because we got to have a place to deposit the money. You don't just go put a money in a bank and say, I want to trade it. The bank's going to look at you like, well, this is not where you trade it. So, what you need to do is you need to find a broker. What's the role of a broker? You can't trade directly on the New York Stock Exchange. You need a broker there to represent you. Think of a broker as your gateway. Um, they're going to provide the software, the platform, which you execute your orders in the exchange for a small fee, okay? Because they got to make money too to maintain their services. This is called a fee or a spread. And we'll talk about that as you get more acquainted with the academy and as you get more acquainted with trading. Okay, now I put up here on the background some of the top brokers for this year for futures trading: TradeStation, Interactive Brokers, Tasty Trade, Optimist. Okay, those are some. Charles Schwab made it. E-Trade made the top 10. All right. So these are just some of the top ones this year for futures trading. Now, each asset class has specific brokers. Like if you go over to Forex, you got Forex.com, you got these other companies. Now, these are brokers. There is a new phenomenon right now, and I'll talk about it once you get into advanced trading, um, called proprietary firms. Okay, they are separate than brokers. Keep in mind, they are not brokers, and I'll talk about them later But what they basically are is they are a company that will allow you to trade their money, okay? But they connect to a particular broker. And usually you have to follow their rules, but they are not a broker. Okay. And we do partner with them, and we'll share that with you down the road once you get ready to um once you're at a point in your trading and in your skill development to really take that on, because that is a big part to bite off. Okay. So that's what a broker is. Now let's talk a little bit about how prices move. Everybody's seen this either in high school or college, the supply and demand curve. As supply increases, um, price is going to decrease. As demand increases, of course, the price is going to increase, because when you have a lot of demand, there's less supply on the market. So prices go up. All right. If you have a lot of supply in the market, you have less demand. So prices are going to drop. It's pretty simple. And if you get somewhere in the middle, you find equilibrium of quantity and price. It doesn't stay there very long usually, but that's what that is. So that's what really makes prices move. If a company releases a revolutionary new product, a lot of times Apple does, more people want to buy the stock, so the demand rises. And then the prices go up. If there aren't enough sellers, then price must go up to entice people to start selling. Okay. And that's what that's about. Conversely, if bad news hits, everybody tries to sell at once. So there's a big supply out there. Everybody tries to sell their house at once on the housing market. Well, it's going to drive prices way down. Okay. So that's really what that supply and demand curve is. And that's what drives prices. Now, one of the biggest challenges that you're going to see in trading is, of course, basic trading terminology. And at the end of the ebook, I've created a basic glossary to kind of get you started understanding some of the lingo. Now, there's a lot of lingo out there, and eventually it becomes natural, but at first it is a little overwhelming. Okay, let me just throw some of the things out there. You're going to hear me talk about, and probably already heard me say a few words like, what is he talking about? Okay, well, the glossary at the end hopefully will get you started. And as we go, as you associate with the community, as you're in the forum and working with NMKL Trader or Trading Academy, then these words will become synonymous with you. Okay. Some of the words that I could throw out there is demo, the dollar. Okay, you got to practice. You got to be online. Scalping, software, buyer, platform, commercial finance, charts. Okay, these are just some of the easy ones. Tools. Now let me throw a couple other ones at you. Pullbacks, um, impulse candles, Heikenashis. Okay, now you can start to see how this can really become overwhelming. So I tell you to write down words that you don't understand and go and look them up. Okay, or ask somebody. That's why we are building the NMKL trading community, is because we are traders helping traders. We are also an educational platform to help you develop the skill to become a successful trader. One of the words you're going to hear us say a lot is, I'm going to ask you, are you profitable? Are you not profitable? Why? Okay. Well, our goal and our mission at NMKL Trader is to help you become profitable and beyond. Okay, so back to basic trading terminology. There's a lot that goes on here. Some of the words I could throw at you are like the bid and ask price. The ask is the lowest price that a seller is willing to accept. A bid is the highest price a buyer is willing to pay. Okay. The spread, I mentioned that earlier, that's the transaction cost. Uh, you're going to hear me use words like the bull market, the bear market. And I'm trying to use words that you need to learn up front first as you're part of as you're learning to trade. Okay. Volatility. It's the measure of how violently price moves in a given time. Uh, Big swings. high risk, but there's also high reward with them. And we'll cover all this. Low volatility means slow movement, steady. Okay, but sometimes you can eat your profits in those slow, non-volatile markets. Liquidity. This refers to how easily you can get in and out of a trade in an asset. Okay, the more liquidity or um, the more supply of contracts that are there. If you're trading futures, the more supply, the easier it is to get in and out. The less supply is less liquidity. Okay, leverage. Using borrowed money from a broker to control your larger position. Now we're going to use words like leverage, and that's what that is. Okay. Uh, Now there are going to be some words that are interchangeable: going long, going short, buying, selling. Okay. Long and buying they're synonymous. Going short or selling, they are synonymous. Those are just some of the things that you're going to have to learn as you go through this particular course, okay? And as you learn to trade, this is about developing a skill, and it's a skill that you can carry for a lifetime. And you can really change your financial situation if you turn this into a business or a professional job or a hobby, whatever you want to call it. I like to refer to it as a business, okay? So you'll hear me talk about that a lot. Now, one of the things that you're going to need to do is determine what type of trader you are, okay? And I bring this up because I'm going to do a brief analysis here in this course. There are four types of trading styles. Okay, so finding your style is like choosing a suit. You need to figure out what fits you. Okay, it must fit your lifestyle, personality, and your schedule. Most beginners fail because they try to day trade while working a 9 to 5 job. You just can't do it. Okay. This leads to exhaustion, errors. It also might get you in trouble at work, and you don't want to be doing that. All right, so let's talk about day trading. A day trader basically trades on minutes to hour time frames. The goal is to close all their positions by the end of the day, by the end of the close of the market. The commitment for this is relatively high, requires constant monitoring during market hours. Pros, there's no overnight risk. The risk of a price gap while you sleep is not there, okay? And we'll talk more about that as we get into follow-on courses. All right, swing trader. Now, a lot of you are going to find yourself in this camp, okay? A swing trader can trade, you know, their trades can go from days to a week. Their goal is to capture a swing or a medium-term trend. Okay, usually their trades make more money, but they don't get as many trades as a day trader does. The commitment's moderate. You can analyze charts in the evening and set orders for the next day. Okay, you can set your limit orders or stop orders. And we'll discuss those different terminologies or those different terms as we are trading. Okay. Then, as you later on become more proficient at trading and you're day trading, and you can also do what we call position trading. Now, position trading itself could be from months to years. Now, a lot of us are position traders and we don't know it. We have a 401k or we have an investment that, we stick a lot of money into it. We know it's growing, but we go back and check it. Now, a lot of us who have investments through what's the word I want to use? Financial advisors. We do a lot of work. They do a lot of position trading for us, mutual funds, things of that nature. In other words, they'll put our money into assets that are going to grow, and they'll usually leave them there for a couple of months to sometimes a year, okay, or even years. The goal behind a position trader is to ride a major macroeconomic trend, okay, like the S&P 500, and the Dow and what's the other one? The NASDAQ have been nothing but steadily going up over time. Okay. So that's what we mean by macroeconomic trends. The commitment's low. You check your positions weekly. You go in, check your 401k once a week. You want to make sure you're not losing money. Okay. Pros, it's less affected by daily market noise. In other words, the short swings usually don't cause issues. Now, another one that you see a lot of people doing is scalping. Okay. Now, this one's sometimes seconds to minutes. You can make dozens of trades a day for tiny profits that add up over time. Now, the commitment for this one is extremely high, requires intense focus and fast execution. So you can't leave your charts when you're scalping, okay? So I want to bring this up for a reason, is so that you understand what type and identify what trader you're going to be, what fits your lifestyle. Okay, so take notes on that. Please, if you have any questions, feel free to ask. But these are the different types of traders you're going to find out there. Now, as a day trader or as you get into trading, one of the things you're going to have to understand is charts and price action. And we're going to talk about charts. One of the what I'm going to have you guys do is, and we use here at NMKL Trading Academy, is TradingView. You can go to tradingview.com and you can actually get an account there, but we use their charts for our academy. And we're going to need these charts because a lot of times we're going to be doing a technical analysis. We're going to be looking for supply and demand zones. We're going to be looking for trends, okay? We're going to be looking at major support and resistance areas. We do this because we want to trade price action. A lot of different traders out there use what we call indicators. Now, I guess these are a type of indicator, but basically we're drawing lines in the sand where if price gets to this point, then we're going to make a decision. Okay, but it's still price action. But a lot of the indicators that you see out there are going to use averages or they're going to use formulas and they're going to count back several candles. Okay. And what I want to tell you about those are that they are lagging in nature. Now, I'm not saying they're bad because the market trend system itself that we're going to teach also uses an EMA, but it alerts you once you get into a strong trend. Okay. But for the most part, we're not going to use a whole lot of indicators. We're going to stick a lot to price action. And you're going to need charts to do these technical analysis with. Um, Charts of the map of the financial world. While there are many types, we're going to learn Japanese candlesticks. I'm not going to go into too depth into the anatomy of candlestick re or you know candlestick geometry and all this stuff that you'll see out there, the different patterns. I don't get too in depth in that, okay? Because what I want to do here at NMKL Trader Academy, Trading Academy, is to keep it simple. All right, so that's why I'm doing this video for you now. This lesson, Trading for Beginners, is all you really need to get started, to understand what's going on and what you're getting into. You don't need one of these in-depth courses that is going to charge you a lot of money to learn basic skills in trading. Because at the end of the day, this is what you're going to go through. Now, as you get into our intermediate courses, now some of those are going to have a membership fee, but I just want to kind of give you a overview with this course and what you need to know to get started trading, so that you can make a decision to come on with us and see what we have to offer. Okay, so again, charting is very crucial, and you'll need to learn how to chart. Price action is very key. Now, with that said, I talked about candlesticks, Japanese candlesticks. You're going to see these. If I go back one, let me go back here. You can see all these red and green bars. One goes up, one goes down. Basically, you can learn a lot from these. These are called Japanese candlesticks. But the very first thing you need to learn is the simple anatomy. Okay, and I'll just kind of go over this real quick. Um, you have, let's start with a green candle. A green candle is one that is the market is moving in an upward direction. Okay, it's bullish. A red candle is considered bearish or a candle that is moving in the negative direction. It is a downtrend. Okay. So now that doesn't mean overall that you're in a downtrend because you have a red candle, or overall you're in an uptrend because you got a green candle. There's more market analysis that goes into it than that. But for the anatomy of a candlestick, and we learn to analyze the markets based on a series of these candlesticks. Okay. But just to give you the quick anatomy, you have sometimes you'll see a what we call a shadow on top or a shadow on bottom. On a bullish candlestick, the upper shadow or the wick on top, the top of it is the high of that particular time period. Okay, these each represent a period of time, whether it's minutes, um, hours, daily, weekly. There's a lot of different things, and you'll learn as you get into and watch my follow-on courses. Okay, so you have um, you have a high of a candle, and then you have a low when you see these wicks. Okay, now the open usually starts here. What happens is, let's say this is a 1 minute candle, and you have this open here, and what happens is, let's say the market is bullish. It'll come up. You'll have some people buy. You'll have some people push it down because they're selling. Okay. Now, um, and then they'll start buying again. It'll push it back up. It'll go up. It'll go up here to what we call the top. Okay. And then you'll get some sellers to come back in and push it back down. And then at the end of that 1 minute, you have the close. Okay. So here's what you're looking for here. The body of this candle is the most important part to read here, because for the majority of this 1 minute, they opened here and most of your buyers stayed in this area. And then, even though it pushed up here for just a small few seconds, it ultimately ended up back down here and closed. Okay, now on a bearish candle or a red candle, it is totally opposite. Okay. Still, this is the high of the candle and this is the low, but now you're thinking in a reverse direction. Okay. Um, Simply, you have an open here because that means, let's say the market went up. Now you got sellers coming in and they're going to push the market down. It opens right here. It might rise a little bit with some buyers, but then it's going to push back down because now you got sellers coming in and taking control, and they push it down, they push it down, they push it all the way down here. And then by the end of the 1 minute, and it'll do some back and forth here in the middle too, but by the close of that 1 minute time frame, it comes down here, and this is where the close is. Okay. And then, of course, you're going to watch the follow on candles to see what happens. So you can do an analysis and decide if this is a place where you want to enter or not. Okay. Now, the anatomy of a candlestick can get really technical. Okay. All you need to know is what an open, a close, high and low are. And then a green is bullish and a red is a bearish candle. We'll get into deeper analysis of the candles as we move forward. Okay. Again, I want to keep it simple. So, um, now one of the great things about this is we also, um, let me get over here to this part. This is really crucial. Um, when we also analyze the markets, we use the word support and resistance a lot. Okay. And I want to cover this because this is part of the technical analysis that we use. Now, on this particular chart behind me, you see that I have lines. These lines are representing numbers of candles, okay? The market comes in over here, it goes up, comes down, goes up, comes down, and then starts going up. Now, you see what we call a support line here, okay? Now, what is happening is price is going up, coming back down, but it's supporting this level here. Price comes back down to this level once, twice, and three times. So that is what we call a support level. Now you look up here on the top, you see price came up here, touched once and touched twice. Now we call this resistance. Now once price goes through here, through the resistance line, it now becomes support. Okay, support for future. One, two, three different times it touches there. And on top, you get a new resistance line that develops. The reason is these highs and lows are places where we can trade. Okay. So that's why we use this analysis tool. Okay. But again, we're looking at pure price action. So if price came down here once and twice, there's a good chance that it may return. So if price is starting to fall off of here, one of the things you can do is look to catch this bounce possibly. And that's a good place to trade. Now, I'm just sharing that with you because that's what a lot of traders do. That's why we use support and resistance. And you'll see us using some of that at NMKL Trading Academy. Um, these are just some of the concepts that you'll be learning. Also, we're going to get into chart analysis, how to determine the uptrend and the downtrend. Because one of the things you're going to hear, and write this down, this is a golden nugget, a trend is your friend. That's why I developed the market trend system. So you know where the overall trend is. You want to be trading in the direction of the trend. How we determine market structure, and we'll have a whole course just or a whole class on market structure. But one of the things we do is we start here when we see when we see price action or an asset starting to go into an uptrend. What you'll see is you'll see price moving up. It'll create a high. Okay, we'll just call this a higher high. It's going to then it might pull back where it creates a higher low than the previous low. Then it goes up. Okay, you can see it moving up here. And then you got another higher high right there, pulls back. This is a higher low. Now, this just simply means this is a higher low than this previous low before. Okay, and ultimately you're watching that to make sure that you're in an uptrend. A lot of times we use this for confluence, okay, or we use it as a second set of eyes, okay, per se, or as a what's the word I want to use? Well, anyway, but confluence meaning we simply want to validate. Okay. Yes, I see that it's in an uptrend, but I want to use one more indicator to give me confluence or verification. So it's a verification process. Now, in the downtrend, you have a low. Okay. You have a lower high than the previous that was up here before. You have a lower low than this previous low, and you have a lower high here, lower than this previous low. When you start doing that and understanding market structure, then you can see that you're in a downtrend, and that also acts as confluence. So you can tell because of the characterization of the higher highs and the lower lows, and the lower highs and the higher lows, depending on what type of trend you're in. But knowing the trend is your friend, is very important. Okay. One of the things that we're going to cover a little bit in the NMKL Trading Academy, we are going to talk about a few indicators. I'm going to say this, there's a million out there, there's billions out there. In fact, people create their own indicators. Um, what I will tell you is you can get caught and lost in the sauce if you start chasing indicators. So please, if you have questions about a particular indicator, I don't mind if you go out there and read about them and try to understand them, but don't let that become your science. Don't let that become bogging you down and keeping you from being successful in trading. The reason is they are lagging. They do take time to understand. And while some of them are great, we want to stay focused on price action. But you can look at, there's a lot of trending indicators out there, the moving averages. We're going to use a moving average. There's the MACD. There's also the parabolic SAR. Okay. There's momentum indicators out there. The RSI, the stochastic, the CCI are just a few. Now, keep in mind what these indicators are doing is taking a group of candles and giving you an average based on a calculation formula that it was created for it. Okay. Now, what that means is it's lagging. It is not price action in itself. Okay, then there's volatility indicators, Bollinger Bands, average true range, and standard deviations. Now we use deviation levels at NMKL Trading Academy, but we use those so that we know where we can take profit, where we can set our stop losses. We use them as substantial levels in the market. Okay. And ultimately, there's even volume indicators. You can see what volume is entering and exiting the market. Okay. So there's thousands. These are just a few that you'll see covered, but there are thousands and thousands on TradingView that you'll be like, maybe I'll try this. Don't get caught up doing that. Okay. Because that'll really stunt your growth in trading. All right. Now, one of the things that I need to cover real quick is this term called risk management. And ultimately, when it comes down to it, this is the most important thing with trading. Okay. If you ignore this chapter, you will eventually lose all your money. If you ignore this slide, if you ignore me talking about anything with risk management, you're going to lose your money. It's not a matter of if, but a matter of when, if you totally ignore risk management. If you just go in and start trading, you might as well go to the casino with your money and enjoy, blowing it there at the casino. Successful trading is not about how much you make. It is about how much you keep. What do I mean by that? You can make one lucky trade and make $2,000 or $3,000, but then you can turn around and lose it in the very next trade if you don't know what you're doing. So risk management is key. That's why we use the 1% rule. Okay. Never risk more than 1 to 2% of your total account balance in a single trade. If you have 10,000, you should only be losing $100 if the trade goes wrong. That's the reality of it. Okay. Um, this allows you to survive the losing streak because you're not going to lose forever. Even the best traders have days when they lose 5 trades in a row. Okay. Especially in a highly volatile sideways market. If you risk 1% per trade, you still have 95% of your capital. If you risk 10%, you're down 50% and likely spiraling emotionally. That's if you lose those 5 trades in a row and you're only risking 1% per trade. If you lose 5 trades at $100 each, you only lose 500. You still have 95% of your account size left to trade with, and most likely are not going to lose that many times if you develop the skill. So we employ trading risk management. We're going to talk about your stop loss. We're going to put stop losses throughout we're going to teach you how to place them throughout the program. Okay. A stop loss is your safety belt. Basically, um, the market moves so fast. Okay. A stop loss is a preset order that automatically closes your trade if price hits a certain level and it's going against you. It turns a potential disaster into a controlled expense. All right. That's what stop losses do. Let's say if the market goes against you and you predicted the wrong way, well, guess what? That's your risk control right there. Okay, in a nutshell. Um, I'm going to tell you this though, mental stop losses don't work. You have to have hard stops. Um, Mental stop losses get you in trouble because the market moves so fast and your brain will try to hope the price comes back. No, 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 no. Set a hard stop in the platform every single time. Every single time. Because if you're just doing it off of hope, hoping that it's going to come back, you're going to be an emotional trader. And when you start being emotional, you take and throw risk management out the door. And then we go back to the very top of if you don't employ risk management principles, then you're just going to blow your account. Okay. You have to separate the emotion, and I cannot say this enough. You have to separate emotion from your trade. Now, here is where I'm going to tell you how we do that. We are not here to learn to trade as a skill. We are here to learn to follow rules. We are here to learn to follow rules. Repeat that with me. We are here to learn to follow rules. Why? Because when we have rules in place, we are employing trading risk management, and it helps us learn to set the emotions aside because we become mechanical and automatic with the rules. Okay. All right. One of the other things that we aim to do here at NMKL Trading Academy is our risk to reward ratio. We may risk one to lose, I'm sorry, we may risk the loss of one to gain three. Okay. Our ratio is 1 to 3, risk to reward. All right. Now let me explain that real quick in a nutshell. Let's say you have $1,000, or let's say you have Yeah, let's just say you risk $1,000 and you trade you trade 10 times, okay? So you're risking 1,000 and you trade 10 different times. That's putting $10,000 at risk in that time frame of those 10 trades, okay? Overall. Um, think about it like this. If you win, you're going to make 3,000. If you lose, you're going to lose 1,000. Okay, let's say you lose, and we're using a 1 to 3 risk to reward ratio. If you lose, let's say you lose 7 trades in a row, you lost $7,000. Let's say you win the last 3 trades. Okay, the last 3 trades. Are you profitable? Think about it. If you win 3 trades, you make 9,000. If you lose 7, you lose 7,000. Take the 9,000 minus the 7,000 you lost, you are still $2,000 profitable over those 10 trades. Now, folks, that simply means that you can lose 70% of the time and still be profitable. You only have to be 30% correct with the model that we're going to use, and we're going to teach you trade risk management or trade management, okay, so that you can be profitable higher than 30% of the time. You're going to be profitable in the 50s, okay, 50% of the time. And this is where professional traders separate themselves from those who don't make it. This is basically what separates the 5% that make it at trading against the 95% that always stay in the retail mindset. All right. I just shared with you something very powerful. So we're going to teach trade risk management. Now, with that said, wow, emotions, the psychology of trading. The hardest part of trading isn't the math, it's the person in the mirror. Now, I'm going to have a whole nother series on looking at yourself in the mirror. You'll kind of click back to this and say, yeah, I remember Nate talking about trading's a mirror. Because here's the deal. When you're trading, it's just you in front of the computer. Nobody else around you to tell you over your back you should or shouldn't do that. Okay? You're going to have emotions. You got to learn to cut them. You got to learn to control them. It's like sitting in front of that refrigerator. You open it, there's some stuff in there, snack on. You got to let it go. You don't need it. Okay? So, psychology of trading. There are three enemies of a trader. Fear. Fear is losing money or fear of being wrong. Okay? This causes you to freeze and miss good trades or exit winning trades too early when you're scared the profit will disappear. Let it run. I've been guilty of this all the time. Sometimes I still am. But employing rules helps you get better and better and better and better. Okay? Number two, greed. This leads to over leveraging, betting too much, or chasing a move that has already happened. Okay, so there's greed that comes into play. And then one of the worst, revenge. Okay, after a loss, you have an urge to get that money back. You got to get it back immediately. It's overwhelming. This usually leads to taking a high risk, impulsive trading that results in even bigger losses over the span of a day. Okay. So we're going to teach you to set targets. We're going to teach you to set a profit target. We're going to set you to set a profit loss target. In other words, if you lose profit, we're going to teach you to set a target there. And when you reach those targets for the day, you just stop trading. Okay. Even if you have the urge to make more money, stop trading. Because in the span of 365 days, you'll make more money if you employ that rule than if you don't. Okay. So how to stay disciplined, detach from money. Think of your account balance as points or trading units rather than the rent money. Okay. You shouldn't be trading rent money anyway. If you are, then you're in the wrong place. All right. So, um, also give yourself a 24-hour rule. If you have a massive win or a frustrating loss, that's what I told you, set targets. Okay. Step away from the screen for 24 hours. It'll be there tomorrow. Your emotions are too high to make logical decisions. So really, please take notes on this. It really means a lot. Okay, now I'm going to have a whole course on psychology of a trader. It's just the way it is. It's it's one of the things that we have to overcome. All right. Now, another thing I want to talk about, a trading plan is something that we have to talk about. You want to treat this like a business, okay? So this becomes a business policy. You have to do this. Um, if a trade doesn't meet the criteria in your plan, you don't take it, period. Okay. You have to plan, just like you have a business plan if you're building a business. Same with trading. Okay. Some of the questions you might see in here is what is my setup? What time frame am I going to use? You need to plan out your risk management. Plan out your conditions. Am I looking for trend following? Is it a reversal? Is it ranging? Now, I just threw this up here as an example of what you can do. We'll have our own defined trading plan at NMKL Trading Academy. But you have to think through it. Am I going to do what time frames am I using? The 5 minute and the 30 minute? Am I scalping? Am I day trading? Am I going to use the 1 hour and the 4 hour? And then swing trading, am I using a 4 hour and a 1 day time frame? Those are things that you have to write down and you have to trade your plan. Okay. Markets, what am I trading? Am I trading crypto? Am I trading Forex, futures, stocks? Stick to something that you learn, relatively quick, that's easy. Don't be trading all over the space. I trade a couple futures markets, and that's really all I trade. Okay. Entries, patterns, indicators, fundamentals. What's causing you to enter the trade? You have to have that written down. Now we'll build a trade plan with rules on it, and everything's going to be rule based. Okay. How about your stops? Are you trading Forex? Are we using pips? Are we trading futures? Are we using ticks? Are we trading stocks? Are we using price for how far that stop has to be away? Okay. What is my risk to reward ratio? All that stuff goes into this. Conditions, trend following reversal, ranging. Is the market ranging? Well, maybe you don't want to trade if it's ranging. Targets. Do I have a fixed target? Am I going to trail my stop? That all has to be planned before you get started. Okay. So this stuff is really crucial to trading. Now, let me talk about some common mistakes that every trader does. I've been guilty of most of these. Um, we all fall into it, and I want to keep you from having issues from the very beginning, the do's and the don'ts. Common mistakes for new traders. Um, Experience is an expensive teacher. It's much cheaper to learn from the mistakes of other people if you want to minimize how much those mistakes, or if you want to minimize what that expense is going to be. All right. Um, if you can avoid I'm going to give you four of these that are account killers. All right. What I mean account killers is whatever money you got to trade right now, it's going to go bye-bye. That's what an account killer is. Okay. So the first one is over trading. I'll go over this list here that I have on the board in just a minute, but I'm just reading some from the actual ebook. Many beginners feel they aren't working unless they are in a trade. I've done that. This leads to taking low quality setups. One of the things we're going to do at NMKL Trading Academy is we're going to qualify our trades. All right. We're going to make sure that we have, we're trading in the trend, that we have a good quality supplier demand zone if we're using one of those. Okay. Um, do we have confluence that backs up our trade? And then if we have that and it meets the criteria, then we'll place the trade because it gives us a higher quality setup and it gives us a higher probability of winning that trade. All right. So quality over quantity. That's the fix for over trading. All right. One perfect trade per week is better than 10 maybe trades per day. All right. Keep that in mind. That's key. Another one is revenge trading, which I talked about already. After a loss, you want to win it back. So you might double up. You might use what we call a martingale system. Do not do that. If you hear of people out there trading martingale, they are high risk traders. They are not professional traders, and you will lose your money. Um, Usually leads to doubling the position size on a bad setup, resulting in a catastrophic loss. And here we go. The fix. Have a max loss rule, and that's where I talk about daily profit losses. Target. Okay, once you hit that target, stop. I'll say it, stop. I can't say it enough. Stop. Stop trading. All right. So, the third one is chasing the Holy Grail. All right. Beginners often jump into a strategy. It's called strategy hopping. Now, this is what I was guilty of for a long time. If a system loses once, they delete it and then they go on to the new magic indicator. Don't do that. Stay with us here at NMKL Trading Academy, and over time, you're going to make money. All right. Um, so every strategy is going to have a losing streak. It depends on the conditions of the market. Stick with one method for at least 50 trades before deciding whether it works or not. All right. That's why later on we're going to journal 100 trades because I want you to determine what your profitability factor is. In other words, how many times are you right out of 100? We're going to do that before you ever get into actual trading any live money or any money at all. Okay. So that's why I want to talk to you guys as beginning traders before you really jump into this. Okay. The fix is the stop loss um, is your contract with the market. You got to know what that is. You got to set that contract. Once it's set, never, ever, ever move it. That's a no-no. Don't move it further away to give it room to run, because it's going to just keep running lower and lower, and it's going to take you out, and you're going to have that tremendous loss. Just let it hit your stop loss and move on to the next trade. It's that simple. All right. I bring this up because these are the things that traders run into to have the most difficulty. Now, the common mistakes that you see here: trading without a proper knowledge. Yes, you're going to learn at NMKL Trading Community and NMKL Trading Academy. You're going to learn the proper knowledge. Ignoring risk management, we talked about that. We talked about stop losses, over trading due to greed, following tips, rumors, social media calls blindly. Don't listen to people out there. They don't, 9 out of 10, especially if they're asking you for a monthly fee to get that kind of stuff. 9 times out of 10, they got a license to lose your money for you, and then you can never recoup that. That's why I don't like financial advisors. I do my own financial advising. Okay. Emotional trading, driven by fear and greed. We talked about that. Lack of patience for consistent results. Lack of patience for consistent results. You have to be patient. Don't jump into the market. Let the market come to you. You set the conditions for the market. Neglecting technical and fundamental analysis. You have to do this. Okay, start with a higher time frame, and we'll do a top-down analysis. Okay, at NMKL Trading Community and here at the Academy. Not keeping a trading journal. I'm going to teach you guys how to use a trading journal. You're going to use it. And if you're going to be mentoring with me, you have to use it. Otherwise, I'll find people that want to learn to trade. That's the reality of that. If I catch you using excessive leverage without understanding the risk, that is another misnomer. These are just common mistakes that new traders do. But I want to help you in the beginning save a lot of money. So listen to what we have to say and teach, okay? All right. We'll get past the gory stuff. Now, here's where it gets fun. When you start learning to trade, when you start finally you get your charts, you get your trading view set up. There is this demo account, okay? And I can't talk about how powerful, how this saves our butts so many times. Demo, demo, demo. Virtual. Why? Because it's no risk to us. All right. You wouldn't perform surgery after reading a book, would you? I wouldn't let you do surgery on me if you just read the book. Okay, you shouldn't trade your life savings after just reading or taking a course. So don't go out there and take out your 401k or your savings account, put it over into a brokerage and start trading after you go through one of our courses. You want to demo in a virtual account, okay? These accounts at TradingView, it's called paper trading, are free with accounts that you create on there. And you can go in there and reset it as many times as you want, and it mirrors the live accounts. It's powerful, folks. So I recommend TradingView Demo Trading Account by all means. It's going to help you practice makes perfect. And when we do our 100 trades, this is where we're going to do them. You're not going to do them with live money, because once you develop a profitability factor or a probability factor, then I'm going to understand something. I'm going to review it with you, and then I'll make a recommendation whether I think you should move on to prop firm trading if you want to use somebody else's money, because they have an evaluation process you have to go through, or if it's okay for you to start trading your own money. Okay. So we really care about you here at NMKL Trading Academy to make sure you make money coming straight out of the training. We want you to develop the skill as you learn. Okay. Yes, you can earn as you learn, but develop the skill as you go through the training. And I can't say it enough. Um, in the next 1 to 30 days, it's going to be very crucial to you learning to trade. Okay. I want you to invest in your education. Now, I'm not doing this just for a sales pitch to come on board with us at NMKL Trading Academy, which I'd love for you to, because I want to work with everybody. But invest in your education and trading. Keep in mind, every time you lose a trade, you're going to be journaling. Write down what you did wrong because that loss is your tuition fee. Okay. But invest in a good educational partner. Now, you're going to see out there that there's a lot of people out on YouTube. There's a lot of YouTubers out there. There's a lot of people on social media that, oh, they'll take a snapshot of a trade they just took, but you don't know how many times they won in a row versus how many times they lost in a row. And they'll teach you their technical analysis in that 30-second clip. But I'll tell you, be careful. Be careful. There's a lot of people out there that are selling these programs that want your money. There are a lot of people out there um, that are just out there trying to develop a following. Be careful. Stay away from crypto scams. If they say send me money, be careful. Okay, invest in a good quality education. Now there's a lot of them out there, and I recommend you go with who you feel comfortable with. But here at NMKL Trading Academy, we are keeping it simple. We're going to find high probability setups. We're going to teach you a 1 to 3 risk to reward. And that way you don't have to sit there and try to hit an 80, 90, 100% profitability because it's not going to happen. Even the best traders out there only trade between their probability rate is probably only between 55 and 65%. They just have developed the patience. They have developed everything that we talked about in the psychology of trading. They have developed it. They've got a trade plan, they follow the rules, and they know how to separate emotion from the trade. Now, I want to share with you. Come on over to nmkltradingacademy.com and get started with us today. Sign up, start taking our courses if you want. And also feel free to get a hold of me anytime you want. I'm going to be in the Discord portion of the community that you'll get access to once you come on board with us. Now, I hope that this has been a very beneficial training because I have just taught you in the last 30 to 45 minutes what it takes somebody, maybe 5 or 6 lessons to go through. Okay. And I'm going to tell you, keep it simple. The harder you make it, it's going to take longer, and that you will learn to trade, learn to develop the skill, and longer to become profitable. All right. This is Nate at NMKL Trader, and I hope this has been a very beneficial introduction to trading for beginners. Good night, everybody.